Guys, welcome to the podcast. I have an amazing guest. I've been looking forward to this. Managing partner at Swissport Ventures. I want to introduce you to Shane Kehoe. Shane, you're very welcome, man.
Vinny, how are you? It's great to see you. Love the hat. Yeah, I like you on brand, like myself today with my swag. But more importantly, I see you've donned on a shirt. Wow, I'm really impressed.
You're amazing because this is deja vu. I mean, full disclosure to our audience, we had a little bit of internet trouble, so I've had to rewind Shane and like put him straight back to the back. So apologies for that. And without further ado, um, let's get stuck in. Tell us about your story. Dublin boy and now managing partner at Swissport Ventures. Tell us this story. How did this happen? It's an amazing story.
Well, first of all, Vinny, you're absolutely right. Originally from the north side of Dublin. And although I've been operating, hustling, networking in London now for 20 years, growing up in Dublin never really leaves you. And the upbringing, the music, the art, the culture, the vibe of Dublin is something that I miss. For me personally, it's been a long and windy road. Things when you look back, always seem easier, but it's always been a hustle, and it always will be. That's the way I like. That's the way I like to operate. I think for me personally, I left Dublin at the age of 21, 22. I initially wanted to get into traditional finance and work as a stockbroker. Back in those days, there was very little opportunity, and it really depended on who you knew, what school you went to, and where you were from. I didn't find that in London. I found that when I came over to London looking for a job in traditional finance, it was very much under the ethos is that they would give you a opportunity, and if you delivered, they would give you more opportunity. Actually, coming over to London in the early 2000s was actually it was quite interesting, because back in the early 2000s, Irish people, especially in the financial sector, were considered hardworking, had the ability to talk, and back in those days, the ability to bring out a client and drink. So we'd moved a long way on from actually making the roads of London, of which a lot of Irish people in the 1950s and 60s went over to do, was to work. But it was amazing throughout the 80s and 90s how people moved into the financial system and actually became excellent money managers, and ability to work at banks, and actually you were perceived to be a core part of the team being Irish. That was lovely, considering what had happened previously in the city of London. But for me, I really wanted to become a stockbroker. I realized at that time, maybe working for the investment banks wasn't the ideal job. I found a hedge fund, or a small group of guys that were managing family money that were investing into IPOs, initial public offerings. And this was kind of the end of the dot-com era that I caught, which was very similar to the ICO market that maybe we'll get on to talk about in a little bit. And I ended up working for a small but very aggressive hedge fund that was very active in investing in technology companies that were going public, listing on the stock market, and basically trading the premium between what they're priced at and where they actually opened. After that, then I continued to stay within traditional finance. 2007, I got headhunted to join a much bigger hedge fund that managed about $35 billion of equity and fixed income and rates exposure. I joined there. It was an opportunity of a lifetime, because I worked with probably at that time the best and brightest minds in traditional finance. The fund was super successful, and my job at that hedge fund was to run equity capital markets. So a real jack of all trades, but a master of none. And really my job was to invest into companies that were going to go public. Everything from Chinese gaming and casino stocks to German solar and thin film producers to US financials to Irish renewables. So a real cross section, but actually that served me so well to what I do now, and was really the building blocks, especially when the crypto market started to produce deal flow in the ICO market, which was so similar to the IPO market. Anyway, I became a core part of a very successful hedge fund, developed out that strategy for several years, and then finally the hedge fund diversified away from straight equities, and I went off and set up my own small family business, really relying on the relationships and experience I had in the past. That was called SVK Capital Management. And it was during that time of about 2 or 3 years of operating that business back in 2015, 16, that I stumbled on an article that said Bitcoin has risen like a phoenix. And I was like, I remember that thing, that magical internet money about 2012, 13, but there was something called Mt. Gox, which, as we all know, was the first Bitcoin exchange by Mark Capellis. It was actually called Magic the Gathering because it was actually a site where that you would trade assets in game. And if you know anything about your history about Bitcoin, it was actually the people that were mining digital gold really understood what Bitcoin and the value of having a digital currency was. So when I read this article about Bitcoin has risen like a phoenix, I quickly pulled up on my Bloomberg terminal, which gives all live price actions of lots of assets. And I saw this chart that went from 0 to 1,000 down to 150 and back up to 1,000. And it was like this light bulb moment, Dinny. I was like, oh my God, I've just seen it go back over 1,000. Like this is looking really interesting because not only has it got interest, but it has resilience. And when I asked around what is this magical internet money, I very quickly realized that it was a decentralized digital currency that looked to me like basically digital gold. And when I looked at the market capitalization of gold back then and the market capitalization of Bitcoin, it didn't take a genius to work out that this penetration rate was only so low and that there could be a possibility. So it was at that time that I realized that it was probably smart to have some exposure. It took me about 3 weeks to actually put the trade on, because back in 2016, there wasn't as many exchanges as there are today. There's certainly no one like Swissport, which is an app which you can buy and sell digital currencies on. One had to go through the whole process. After all that, what I really realized, Dinny, was that the price action wasn't actually that important to me. It wasn't a speculative asset, although it had the elements of a speculative asset. It still does. We just saw the volatility last week, so we're very aware of what a speculative market looks like. But for me, it was actually all about the technology. You know, I came for the revolution, I stayed for the evolution. And when I realized what was actually being built, that blew me away. And I was like, okay, so this now is a network of value and trust, right? This is the ability where the internet was the information superhighway. This is now the decentralized protocol where we can exchange value and trust. And that to me just blew me away. So technology never goes backwards. And I knew at that point, Dinny, that this was now my calling. I had to leave traditional finance. I had to solely focus every moment of time going forward on how I was going to get involved in this community. And it was at that stage that I realized that it wasn't about speculation. It was about actually making investments into the next founders, which will ride this disruptive technology for the next 10, 20, and 30 years. I set up a venture fund. I called it SVK Crypto. We've been allocating capital into the space for the last 4 years. That's now finished from a capital allocation standpoint. And it was at the end of last year when I got the call to see if I wanted to come in and talk to the guys at Swissport about managing an internal venture fund to do something very similar that I did. I didn't have to be asked twice, and here I am.
Yeah, I was lucky enough to meet some of the Swissport team with you over in London, and it just seems like a cool company. It seems like a good fit for you because it's energetic, it's vibrant, it's positive. It's sort of, I imagine you're really enjoying the new role.
Well, Denny, so I'll give you a laugh. The day that I signed up and I got my email address, the first email I got was, would you like to join us on a company retreat in Lisbon? And I was like, oh, I mean, is that for me? I've just joined, like, company retreats are. So I'm like, oh, okay, so that sounds interesting. Let me go and talk to HR. And HR like, yeah, you've joined right at the right time. We're going to Lisbon. It's going to be yoga and mindfulness and fitness. And I'm like, okay, are we going to do any work? Like, oh yeah, there'll be some, team building and stuff, but like, it's all about health and mindfulness. I come from an industry which is solely focused on generating returns. No one gave any time to your mental health or anything like that. If you were perceived weak, you were fired. And when I finally got over to Lisbon, not only did I realize that everybody there was very focused on mental health and well-being and yoga and everything positive about it, which was amazing. The second thing was that I realized that there was like about 180 people away with us. And I realized that now Swissport has over 250 people currently employed. So we're like a small army. And the third thing I realized is as I looked around the room, there was probably 5 people older than me, and everybody was in their 20s and 30s. And as I went around the retreat for the few days, it was amazing to meet younger people that were front-end developers, back-end developers, focused on KYC, AML, looking at numerous different protocols, solely focused on DeFi, payments providers. And I'm looking around going, everybody here is so smart. And I think as we get older, it's amazing to work in an industry where just because you're old or you have some type of title on your name and you're perceived to be the most knowledgeable, in crypto and blockchain, I'm meeting guys that are 20 years old that are schooling me on consensus mechanisms, are different layer 2 technologies, are basically how a staking pool works, with some type of and this is probably current, some type of stablecoin involved with it. So anyway, I'm really enjoying it because I'm working with smart young people that are actually there on a mission to democratize wealth management and make it free, fair, and fun for the community. So I think that's really driven by the CEO and the founders of the business, which is lovely to work with people that care so much about their employees. And I think crypto has a lot of those core components to it. So yeah, for me, I feel like I've come home. I've found my tribe. I found my pack. But it's really cool.
That's awesome. I'd love to chat to you about Bitcoin for a second. And one of the things, as we've exchanged messages, and I've heard you mention, it's where I got the phrase "spreading the Bitcoin love," or "in code we trust." To someone trying to understand Bitcoin who doesn't have any, say, experience in financial markets, how would you, I suppose, sell it to them? What are a couple of the critical or key things for an average person to try and communicate or to help them understand about why we're trying to spread the Bitcoin love?
Yeah, I think you probably got to go back. I think you probably got to go back to around the time of the Genesis block, right? You got to go back to the start. And when you look at, and it's an amazing story really, when you talk to people about Bitcoin or people that are interested in it, and everybody has a slightly different level of understanding. But when you're talking to someone that knows a little bit about it, and you go back and you talk about crypto, well, crypto is cryptography, right? And so you go back and you look at all the hardcore cryptographers that were all around the Bay Area, and they were looking at how you could deal with the double spend problem, how you could have cryptography embedded into technology whereby it would be hard to replicate, right? So I have a JPEG and I copy the JPEG and I send it to you. You have the JPEG, and that works great for you and I copying text or photographs. It doesn't work too good with money. Copying and pasting money is not a good idea, especially if you're in America. I think you'll probably have an orange boiler suit and do some time for that. So when you look back at the early pioneers, they were looking at a digital money. And actually, when you think about how we live our lives today, we're all in digital, right? Especially with layer and Web 2 developments and social media platforms, and smartphones changed everything. The iPhone and opening up the App Store was that watershed moment. So I think when you look back at what was currently happening, we had just come out of the credit crisis, the financial crash, and Satoshi, whoever he or she or them are, I think that they were fed up with the boom and bust nature of the traditional fiat system. And when you looked, and I'm very aware of what was going on with mortgage-backed securities, I was very aware of what was going on with the property market, particularly the Irish property market, where I'm sure we all had exposure to. And just the general carry on, whereby you would walk in to a bank on a Monday and they would be like, we're going to give you 120% mortgage, right? And actually, you shouldn't just buy one, you should buy 5 of them. And we're going to give you the money to do it. And that's going to be great. Until we're not going to give you the money, and we're going to change the terms of your mortgage. Oh, and we're then going to go in and repossess all your properties. So when you were looking at the boom and bust, the reckless leverage that all the banks, Anglo and everybody else, Lehman Brothers, Julius Baer, et cetera, were doing. I think that the early pioneers of the cryptography scene and of Bitcoin were like, we need to have a better way. We need to have a currency which is native towards the digital environments that we're going to go into. And also it has to be done in a way whereby it's not run by a central bank, which is basically printing money and having an inflationary environment whereby you look at the history of the US dollar since its inception has lost 97 to 98% of its value. I mean, that's even hard to contemplate when you look at that. And when you look at M1 and M2 money supply, just over the last 24 months, something in the region of 50% of the money that's now in existence in the States and in European countries has been printed in the last 24 months. That's a crazy statistic. Now, the Federal Reserve in the US don't come out and have transparency on their books, but that's what's been talked about people in the know. So when they were looking at a better future for all, a future whereby your money can't get confiscated, you are your own bank, the backdrop and supporting mechanism for Bitcoin is code, hence in code we trust. I don't know if you've ever picked up a dollar, but it says in the dollar we trust. So in code we trust is taking it away from central government control. And that's the whole libertarian thing I spoke about at the start. There was a lot of people that wanted an idealistic society, and they were here for a real revolution. But we've stayed for the evolution, and the evolution from back in those early days, since the Genesis block to where we are now. Like, it's mind-blowing what's happened with Bitcoin. Like, within this small period of time, we've gone from a conceptual idea on a white paper to actually now being a digital asset class, a store of value, which is not just owned by retail anymore, but it's owned by, and I've heard you talk about them, some of the biggest money managers in the world, owned by banks, owned by countries. And the ability to own your own wealth and have wealth which is not being inflated to zero, and the ability to store that as value, as digital gold. It's the most pristine, beautiful digital collateral that I've ever seen. And I think really, how can I convince people that this is something that, they should look at? That's not really my job, is to convince them. My job is to show them and give them the information. And if it's for them, it's for them. If it's not, it's not. And it's really strange. People always buy Bitcoin at the price they deserve. And I've said that for a really, really long time. And it's true. When you go back and you look at the first piece of Bitcoin that you bought, you're probably like, yeah, I thought it was expensive at the time, but actually I deserved to buy it at that time because I had did the work and I had spent the time and I had invested money and I took the risk. And for me, Bitcoin is an asset. And I hear Michael Saylor talking about digital property. For those of you who don't know Michael Saylor, he's a very progressive CEO in the States, and he runs a company called MicroStrategies, which basically took all their cash balances on their balance sheet and bought Bitcoin, which was a very ballsy move, and I've got a lot of respect for him because the figures were outstanding. But his idea was that, sure, I can hold cash, but I'm being deflated at probably plus 10% a year. So he gives a great analogy about holding cash in your bank, just like you or I would have a savings account, or friends of ours would have, money for a rainy day. He gives the analogy, Dinny, and I'm sure you're going to love this, as the melting ice cube, and it's almost like your money is melting away. And I don't think people really got that 2 or 3 years ago. People that weren't in finance didn't really understand inflation. People don't actually understand money very well. Like, yeah, or you use money, okay, and you know what the price of it is, but where is it actually created? Like, how does
where does it come from? Yeah.
and why does it come out? And why does it have a value?
I had an interesting one, Shane, today, in that I met a client. He had 100K to invest. Okay. And my framework on it is, if inflation is 7K, well, you're getting to invest seven. If inflation is 7%, of that 100K, you can invest 7 grand of that risk free, because you've lost that in a year.
Yeah.
And I don't know if that's how would you agree with that? That it's almost like a free. You can buy 7 grand of Bitcoin free this year because you're losing that in purchasing power by leaving it in cash.
Absolutely, and the figures that you quoted of 7% are way off. Like,
Yeah.
inflation is running in double digits. Like, just go to a store that you know what the price of a good is, and look at the price of it now. It's not 7% up. It's just like, right? Like, everything is up. Now, why do they want to keep inflation level low? Because certainly here in the UK, there's a lot of private sector workers, nurses, teachers, government workers, and they get wage increases in line with inflation. The government pay their wages. So if they come out and the government go, oh, inflation's running at 15%. Oh, now we're going to have to increase the payment for nurses and teachers and everybody that's related to that. So they want to keep the figures low on inflation because they have to pay for that. But what we're seeing is a massive gap, because inflation is running high. And why is it running high? Well, if you were sitting at home during COVID and lockdown, which was a terrible time for everybody, and my condolences for people that suffered mental health or lost their jobs or family or friends, it was disaster. But when you looked at how much grants, COVID support, furlough payments that were all paid for, which governments were already strapped for money, all of a sudden got hundreds of billions of more pounds in order to pay for that. Well, where did that come from? They printed more money. They have control of their central banks. So that more money that came into supply, now there's more money for assets, and assets go up. So you've seen that with cars. You couldn't get new cars, so secondhand price of cars have gone up. Watches, property, and of course Bitcoin and crypto led into that a little bit, because there's abundance of the cash in the space, so it's going to go towards assets. But for people that were long assets, then it was a value accretion on their portfolio. So I think, kind of coming back to kind of where we were with Bitcoin allowed us to control and own something that couldn't be inflated. And a hedge against inflation for me was something that I really, really liked. But as I said, it's still really, really, really early. And I'm sure we're going to get on to talking about the current market as we see it now. Yeah, I think Bitcoin and Ethereum are down from their highs about 58%, which is a big drawdown. But look at where we've come from, right? Like, just zoom out. Like, when in doubt, zoom out. And sure, you're going to get over and outsized returns, but there's got to be volatility attached to that, and that's kind of something that we've seen. But for me, we're still very much in the early stages of the crypto revolution.
Yeah, I don't think you can play a short-term game with it. I think when people say, I've heard it said, well, Bitcoin's not a hedge against inflation because it's not beating inflation. Like, but you're just cherry picking numbers. You're picking today and tomorrow. But you hedged against inflation by investing into Bitcoin in 2020. Bitcoin rose, I think it was 300% from there to here. Like, that's really beating inflation over those 2 years. But if you decide to buy Bitcoin today, it's always a long game. And, as I'm sure you'll agree, I'd be like, if you're not going to hold it for 4 years, it's probably not the asset for you. It's a long-term savings technology. And as you say, because we're so early, there is big swings in volatility, but it's a price. It's a price that you pay as a hodler. It's not easy. You don't get lucky. You go through the volatility, and what allows you to sustain the volatility is the amount of work that you've put into it to have understanding, and with understanding, I suppose, comes conviction that this is the price I pay, that tomorrow my Bitcoin could be worth less, but I'm not buying it for tomorrow. I'm buying it for its future potential. I'm buying it because I understand every 4 years the supply is cut in half, and with added scarcity, the asset, probably has to be repriced.
Absolutely, and you're talking about it correctly. There's one other thing that I've heard you recommend, and it's gold, and it's really simple. Hey, dollar cost averaging. So you've got a long-term hold on it, and you're dollar cost averaging in. Therefore, that you're looking at generational wealth. And by the way, I think 4 years is short. Like, I'm looking at buying this thing for decades. Like, I've got diamond hands. For those that have been in crypto, means that you don't sell them, no matter what happens. And then, yeah, I understand for some people that may be a bit reckless. Hold on for dear life. But it won't be reckless when I look back in 20 or 30 or 40 years time, and I will have made a significant and substantial investment. I've seen this movie before. I've seen this type of price action. Like, I remember the early days of the internet. Like, I remembered what happens back when we were trying to get connected to this thing called the internet. And people are like, why would I connect to the internet? I can just go to the library and use theirs for free. Like, think about that, right? And then it was like, well, that's a computer. That's for nerds. Why would I ever want to get on the internet? Like, then you get on the internet and you're like, oh, okay. So the first killer application on the internet that drove mass adoption was email. It's like, oh, so I can now send an electronic mail to somebody on the other side of the world and I won't have to pay for a stamp. Well, that makes sense, right? Then you get on the internet, you're like, oh, I'd never put my credit card in on the internet. That's full of, dodgy stuff happens there. Like, you're like, you never put but okay. So in 20 years time, what you're going to see is you're going to see scantily clad girls on Instagram telling us what we've had for breakfast. Now, I would never put my credit card deals on the internet, but 20 years time, my daughter, my sister, my girlfriend, my partner, are going to be telling them about their day walking around in their underwear. Like, and that's their choices. I'm not commenting on that. Everybody can do whatever they want. But what I'm trying to say is that when we looked at the technology of the internet, it was like, oh, that's just for email and nerds. And now we've gone into something which nobody could have forecasted, right? With the rate of adoption and how it's so embedded into people's life. The same thing will happen with blockchain technology and crypto. So it starts off gradually, and then it's suddenly. When we look at internet connection and penetration in 1996, 1997, 1998, it was about 62% year on year. Look at wallet adoption over the last several years. It's running at about 112%. It's almost double what we've seen in the internet. So adoption and trends are happening faster now than they ever have. So that's really interesting to me. And also, although the price action might be volatile, you're looking at the wrong metrics. The price action is actually the most boring part of this whole story, right? It's just price. It goes up, it goes down, okay? And for speculators out there, it's the only thing they're interested in. But actually, it's the least important thing, because price action in this market, because it's so early and nascent, is driven by emotion. And emotion is fear. Oh my God, it's going to go down. Or greed. Oh, I'm going to make $1 million, right? And it's the fear and greed that we're in this market. And then you add in a leverage component on that. And that's when stuff really gets crazy. So, hey, rather than going and getting $1,000 with a Bitcoin, I'm going to open a trading account, and with my $1,000, I'm going to get 10,000 worth of Bitcoin. But what you don't realize is that once that 10,000 position, because it's on leverage, falls 10%, your margin is gone. So what I'm trying to say is that this market is an emotional market, which has been mainly retail driven, which has got leverage in it, and it will move up and down. But that's not how you value the market. You should be valuing the market on the technology adoption. That's way more interesting. And all I see when I look at the Bitcoin and blockchain and crypto space with regards to adoption, infrastructure being built, regulatory environments, custody for institutions, analysis that are looking on chain analysis, different types of protocol, everything from high-end secure all the way to free, fast, and scalable, right? Like that whole adoption curve just goes from here to here. So there's a dislocation between the price action. Okay, it has gone from zero to where we are, but the volatility is there. The longer that we go out, the volatility will decrease and will catch up with the innovation. And I said, I've seen this before. It was the exact same thing that happened back in the early days of the internet. Nobody understood it, thought it was crazy. We move on 10 years, we start getting smartphones, and before we know it, we're clicking a little button on our phone called Instagram or Facebook or whatever you look at or whatever you do, and you're not even realizing you're connecting to the internet. You just think it's like it's an app, right? And if you don't connect to the internet on your phone, or it takes more than 3 seconds, you actually get pissed off and you start holding your phone and connecting on Wi-Fi. Like, do you not remember how difficult it was to get onto the internet? When you'd have a dial-up AOL and you put it in your Dell computer or your gateway, and you'd put in this like 24 different code, and then the dial-up would happen. And then your dad would pick up the phone and go, "What are you doing? You're on the internet. How much is that going to cost me? Get off it. What are you doing on that thing anyway? That will never take off." And then you put down the phone and you go at it again. Like, that's what it was like, didn't it? So crypto may feel chunky and it may feel cumbersome, and the UX or UI might not be right. And, oh, it's too technical. That all gets resolved. Like, that all becomes seamless and streamlined. And another thing is that we're old in the crypto space. And so we remember getting paid in cash, and we remember going out with £20 on a weekend. And I mean, £20 on a Friday and Saturday night would pretty much have you sorted, right? It would get you, as long as you were over 18, a couple of beers. It would get you into your local nightclub. It would get you something to eat at the end of the night, whichever you liked, chips, pizza, or kebab, and it would get you home, right? Like, and you would have the best night of your life. £20 doesn't get you very far. 20 euros doesn't get you very far now, obvious reasons. But we remembered the value of cash. And we grew up in that type of environment, checkbooks, cash, and then, finally debit cards came out, and now we chip and pin. You look at a 5-year-old to 10-year-old now, and look at them in an airport or in a coffee shop or in a restaurant with their family. And the 5 and 10-year-old is not there looking at cash and taking out coins and adding them up like we would have. 5 and 10-year-old has his Nintendo Switch out, and he's in Roblox, right? He's in a gaming environment where in that game, there's digital assets, there's digital tokens, there's avatars, there's shields, right? There's in-game assets, and they're all done digitally. So when that boy or girl comes to an age of 12, 13, 14, and they go into their parents looking to go out for a night, and you take out, if they're still around, which I probably am 50-50, and try to give them 20 euros, they will look at you like you are crazy. But we don't see it like that. But that's what's going to happen. In fact, the amount of money in the UK, the cash in circulation versus the whole money supply in the UK is only 2%. Wow. So all the wealth in the UK, right, 2% of it is only in physical cash. And that's a pain for the Bank of England. They want to get rid of that by 2024. They want to be a cashless society. because moving cash around, collecting it, storing it, cleaning it, it costs more, right? And also there is a black economy that deals in cash, right? So by getting rid of cash altogether, then they have the ability to review that. So what I'm trying to say is that cryptocurrency and blockchain technology and Bitcoin may feel alien to our age group and older, but you're thinking about it selfishly. Look at the younger generations, they're going to be all over it. And for me, when I'm looking at generation wealth, they're going to be the next wave of developers, the next wave of people that are focused on climate change, the next wave of people that aren't okay having centralized systems with all my data in one spot, which that they don't control and they're selling on. They're not going to be down with that. So I have a lot of faith in the younger generations that they won't be accepting what's currently going on with Google and cookies. They won't be accepting the data being sold to Cambridge Analytica from Facebook. They won't be accepting not owning and remunerating their content. And I think blockchain technology in a lot of cases makes that possible. So yeah, I think really gotta zoom out here and understand it, really what's going on.
This is big. Well, if we could touch on altcoins for a second. So we've sort of gone through Bitcoin, and I think you've had amazing comments on it, and great education for myself included. But on altcoins, like I know with your role, managing partner, Swissport Ventures, you're investing into private rounds. Are altcoins a way for retail to get into private rounds, or how do you see them? Like, let's say personally, would you have conviction belief in altcoins, or and if so, are there any you'd be bullish on, or how do you understand them?
Yeah, so altcoins are alternative coins, right? Alternate coins. So basically not Bitcoin, right? Are not Bitcoin or Ethereum. For people that watch your show, they're very familiar with Bitcoin, Ethereum. I think altcoins were really driven in the 2017 initial coin offering market. And back when I got into crypto, I think there was about 700 tokens or coins. I think now on coin market cap, there's 19,000 different tokens. Now, a lot of them, which has been phrased shitcoins, I probably don't like to call them that, from back in the day, won't see the light of day because anybody can generate and spin up a token. So I think what I'm trying to say about altcoins is that not all altcoins are the same. Really, altcoins were a funding mechanism from back in the day, almost like a crowdsourcing, or like almost like a way to fund digital projects, and they would do that by selling a token. And some of those businesses didn't progress very further. Actually, I think about 90 to 95% of the ICOs back in the day, unfortunately, just didn't make it. A lot of people talk about the scamming side. I've never been exposed or seen any of that. I think what you have to realize is that businesses are tough and they're hard, and just because you've got a pitch deck doesn't mean you're going to be successful. So now you layer cryptocurrency on a blockchain technology in a nascent space, it becomes even harder. Like, business is tough, right? Like, you know, it's not like I'm going to turn up and I'm going to win. So when you're looking at the altcoin market, not all altcoins are the same, right? They're basically the currency for each of those projects. You're very true. At Swissport Ventures, we source, analyze, and invest into crypto and blockchain projects that are strategically aligned with the mission of Swissport. So our role at Swissport is to democratize wealth management, make it free, fun, and fair. Like, so what does that actually mean? Well, with Swissport, we've created an app whereby people can buy and sell their crypto. And it's extremely simple to use and easy to onboard. So it's taking away a lot of the tech and structure, which is sometimes difficult to comprehend on a traditional exchange. So when we go to look to make investments at Swissport, we're looking for mass adoption, right? We're looking for investments which will bring in the next billion users into the space, because without mass adoption, we are not going to progress forward. And by the way, like, crypto's not going anywhere. The amount of human capital that has pulled into this space isn't slowing down either. The amount of infrastructure that's been built, and even just one of the use cases, Dinny, with DeFi, like we've gone from like zero total value locked in DeFi to $100 billion. That's decentralized finance in 2 years. So what I'm trying to say that with altcoins, you have to invest into something that you like and know. You have to do the work. You'll find there'll be no shortage of projects that are trying to, we call them, boil the ocean, right? It's difficult to boil the ocean. And you have to invest into something that you personally have an edge in. And there'd be no point for me saying this altcoin's gonna go up or this altcoin's gonna go down, because no one's got a crystal ball. And the thing is that with regards to some altcoins I've invested in the past, I've bought them for the long term. It's not my interest to buy something that we think, to use the expression, pump or go to the moon, because those things are too difficult to call. I think you want to make investments into founders first and projects that you really believe in, and then you have to be patient for them to deliver. Because there's one thing that people can't get right, even the best investors in the world, and that's market timing. So you know something's going to happen, got it, you've done the work, the fundamentals are intact, but you don't know when everybody else is going to realize this. And just one point, what we've seen last week in the market, with there's a massive sell-off, and maybe we'll get into why that happened in a little bit, but fundamentally I had done the work, and I know Bitcoin and Ethereum are sound, right? And I know that the risk in the markets last week was not systemic. It's focused on one particular action with regards to Anchor Protocol, UST, which is a stable coin, which has an algorithmic way of being stable, and Terra and Luna. So that basically rocked the market, and it should have rocked the market for obvious reasons. When a stable coin is no longer deemed stable, there is a problem, a fundamental problem with that particular stable coin. $40 billion, yeah, $40 billion was wiped off the market capitalization of Terra and Luna to zero. So a lot of people got hurt in that. And that really upsets me, because there would have been a lot of holders of that token which would be looking to generate a return. By the way, no one said this was a risk-free rate of return. No one said this is a guaranteed profit. However, I don't like to see when something goes to zero, but fundamentally it was flawed. My point being is that when a stable coin becomes unpegged and the market collapses, which is, there's been some obviously collapses in crypto, but when a stable coin falls, it reminds me of when Thai baht was pegged. It's an unusual situation, but fundamentally I'd already done the work on Bitcoin and Ethereum, and my conviction is rock solid. So when I see an asset fall 20 or 30 or 40% in a day, I'm like, that's overdone. What's happening is fear is in the market, and it's emotional, and fear runs through the market so much quicker than greed. So everybody just starts puking it up. And there's a great saying, and it could be from Warren Buffett: when everyone in the market is fearful, it's time for you to be greedy. And when everybody is greedy in the market, it's time for you to be fearful. And it's a lovely way of trying to get your timing right. There's another expression used in traditional finance: when there's blood on the streets is when you make the most money. Like, you're a property guy, and I know you've had a lot of experience in that. Wouldn't it have been great to have all your savings ready to deploy in 2007 when the Irish property market just collapsed? Because you could have bought stuff for 20 or 30 cents in the pound. I'm sure there was a few people who probably did, but the majority of people rode that all the way up. So with regards to altcoins, it's a different level of risk. So from a retail speculator, and I presume that a lot of people watching this are retail, you got to do your own work, and you got to find something that you love and know. And also, listen, keep it diversified, right? You know, have a balanced portfolio of some Bitcoin, which is a generational hold. And hey, if you want to blow your lights out and you want to take some other risk, then go do that. Don't put all your investing capital into, you know, one particular token. That historically has never worked, right? And if it does work, you were very, very lucky. Take some profits. You know, if you get involved into an altcoin and it moons and you know, it goes 10x, take some money off the table. Feel good, right? Take your missus out for a nice meal. Go book that nice holiday that you always want to. Come out with the lads and buy them a few pints. Like, take some money off the table. Feel good in the trade. Hey, maybe even take out, if you put in 100 euros, 1,000 euros, 10,000 or 100,000, and it doubles or triples or quadruples, take out your initial seed investment. So now you've got the house's money on the table. It's funny, Denny, I'm not a gambler. I don't gamble and I don't go to casinos, but yet I've been investing into global equity markets and crypto. And like, I'll put on a sizable trade and I won't even think about it. You know, if I went down to bet on the Grand National and I lost 10 euros, I'd be pissed. Like, you know, it's like, it's a mind shift, right?
Yeah.
Because I understand the risk rewarding gambling. But with alts, go do the work, get into the groups, try to find quality people doing quality projects, and go in and invest in it. But that market's changing so much. At Swissport Ventures, we invest into early stage, so it's usually kind of pre-token generation event. And we're looking for projects which, one, have a great team, right? So the team are known in the community. They might have executed previously. We're looking for projects which have got their timing, we think is about right. So, you know, it's the right time for them to launch this particular thing. Like, if you had come to me with a company that we're looking at digital identities in the metaverse world 3 years ago, I'd be like, well, there's no metaverse world being built. This is cool and it's going to go there. But if you go raise a couple of $1 million now in a token, you're not going to have the runway that you need to get to product market fit. So the market can stay irrational far longer than you can stay liquid. So this is the timing thing, right? So you've got to be making investments where you think that, the timing is right here. This seems like this is going to work with, given the current market backdrop. The team are right because they've been in the space before. They know what they're doing. The terms and conditions of the deal are good, right? So we're going to buy tokens, and the tokenomic structure looks to be, you know, fair with regards to, you know, how they're structuring it. The technology, right? Like, does this technology solve the problem that they're trying to do? Does it have a competitive edge? Can we check the technology? Is there a code we can audit?
It sounds,
Also,
it sounds like this is a lot of work for John the carpenter to do, as opposed to understanding Bitcoin. I think it's a lot simpler for me to get my head around it.
yeah, this is, and I really was just giving you a snapshot at Swissport
Yeah,
Ventures. With regards to altcoins, do the work, go buy something that you love, and hope it works out. At Swissport Ventures, we're investing into altcoins, but fundamentally our analysis is
it's deep.
as deep as an ocean. Yeah, it's kind of, I like to sum it up as the 5 T's. You know, your team, your tech, your traction, your token, and your terms and conditions. And we go deep on all that, but we have to, because we're the custodian of other people's money in that respect, right? We're taking off balance sheet investments. So, you know, we're making strategically aligned investments from our balance sheet. So we can't just go in and say, hey, we heard this is going to do really well because somebody told me about it. Like, that's not what we do. We're deep tech crypto value investors, and we want to be aligned with those next billion-dollar companies. But in doing that, Dinny, it's really cool because you get to meet great people and you get to see lots of insight and like lots of early looks at projects. And I'm extremely grateful for that opportunity. And we're stewards of our capital, and we must deploy it. We must deploy it correctly.
I'd love to ask you a little bit. There's a lot of friction between, some people are very much Bitcoin maximalism, and then some people are more, I don't want to say open-minded or the maximalists will kill me. But let's say the likes of, and I just want your take on this because I'm here to learn, and I always try to be open-minded, and I love being the dumbest person in the room because I can learn the most. But the likes of, say, Saifedean Ammous, author of the Bitcoin Standard, which is the Bitcoin Bible to some degree, he would consider Ethereum, and I'll quote him: "Ethereum is the mother of all assholes, where shitcoins spring forth." Evidently, to some degree, you disagree with that. But what is he not understanding, or why do you think a Bitcoin maximalism is, I suppose, incorrect?
Yeah, I know loads of Bitcoin maxis, and they just solely focus on Bitcoin, and I think that's cool. I think that they've since day one have built a great community of belief and faith, and not only that, but a technology which is probably one of the biggest and best technology revolutions since electric power, the wheel. Like, we're talking that like it's that serious. Like, there's probably 5 big inventions in the world, right? Like, it's up there with the steam engine. So I understand why they're proud of that, and I understand why other things from the blockchain and Bitcoin space has blockchain and Bitcoin space has evolved, and I can understand them thinking it's an inferior. But I don't think the story's fully written yet. I think we're in experimental mode. Like, we're still, really, really, really like years into this process. And sure, we're going to break things. It's early. Like, we don't know where this is going to lead. So there's been some tribalism, and it's basically being driven by kind of the communities. I think for me, I respect everybody's view on it. I think you look at Ethereum, and I think Vitalik and all the Ethereum developers and what they do on a day-to-day basis to try to push on is amazing. And they've dedicated their lives to this. And I've met some of the smartest people in the Ethereum community, and they're trying to have an open source network where people can build things on, and that's inspiring. So sure, when you have an open source network where everybody's invited, yeah, you're going to have some people that are there to game the system, and you're going to have some people build some pretty crap stuff, but like, you're going to have people build amazing things. So yeah, for me, I tend not to kind of get caught up too much in that. I think it's kind of changing as well. Like, I must admit, I did love the early cryptocurrency conferences, because everybody would be rocking around in kimonos and cowboy hats and like crazy crypto crazies, and I mean that in the most admiring way. It was a real melting pot of like crypto hippies, digital nomads, like techies, and then the curious and people that were kind of understanding how capital formation happens, like me, and kind of coming at it from an investor standpoint and being like, wow, this is really cool, because nobody's wearing a lovely shirt like you're wearing today. Everybody was in like hoodies. And as I said, I remember going to conventions and people wearing kimonos and cowboy hats, and like, everyone just got back from Burning Man. And I was like, oh, okay, I'm down with this. So I think as we mature, we've probably lost a little bit of that. And the space is growing up, financial institutions have moved into the space, and we're looking at regulation frameworks, and we're looking at safe asset custody, and we're looking at firms that do data analytics, like Elliptic and Trustology, and it's all moving in a great way, and it has to progress because we have to do better, and in order, if we're going to onboard the next billion people, we have to do it in a way where the UX UI is simple, where there is security built in, and there's different product offerings, for different. I think you can spur growth with this kind of approach. I think you 20,000 Bitcoin they bought at $1 on a ledger somewhere. So my heart doesn't go out to them too much.
Awesome. I know you have dinner to go to, so I'm going to wrap up my last two questions into one, Shane. One, what do you think of market conditions at the moment? Is it a buyer's market? And two, what's your price of Bitcoin in 2030, just for fun?
Yeah, so let's kick it off. So, okay, to start, right, the global backdrop for crypto and macro in general has been brutal, right? So we've seen what we call in the business risk off. So any risky assets have been sold. Like growth stocks that have a negative cash flow are down as much as 50 to 70%. Growth stocks, and you're looking at some stocks that did really well during lockdown, like your Netflix or Tesla. Crypto's been under pressure too, right? Core assets like BTC and ETH, down 60% from all-time highs, and altcoins down 80%. It's just risk off, and that happens in a market when there's a lot of leverage. But also, what we just experienced with Terra and the ecosystem. We lost $40 billion of market cap just in Terra alone. That's a huge amount of market cap to lose. And it was from both small and large investors. Wealth just vanished, but also it happened so fast. That was amazing just how quickly it unraveled. So there's a lot of fear in the market, and I think there's headwinds. But for me, Bitcoin got down to $26,000 there last Friday. I'm looking at it going, that's just an amazing buy opportunity. Fundamentally, nothing's changed. Everything's still intact. Nothing's being hacked on Bitcoin, right? More and more technology gets built. Countries adopting it. I see something fall 60, 70% from the high. I'm like, now it starts to get interesting when there's blood on the street, like I said. So anyway, I think anywhere around these levels is a great dollar cost averaging in with a 10-year hold. Do I think Bitcoin in the next 10 years will be higher than lower than it is now? I feel a little bit like Bruce Forsyth over at his game show going, it's going to be higher. So for me, it's a straight up buy, right? That's just counted lucky, I think it was called, wasn't it? So yeah, I think this is a wonderful time to start dollar cost averaging in on this and learning and knowing about it, and of course having a diversified portfolio and only ever investing what you can afford to lose, and take profits along the way for those people that are looking to take profits and feel good. But for me, I've never seen a more interesting investment opportunity in all my life. For me, I just don't know what else I would hold rather than crypto and blockchain. I just listened to Mike Novogratz there a couple of days ago on his monthly and quarterly call, and he was talking about people having an asset allocation of 1 to 5% of crypto. I was like, 1 to 5% is not that much. I know some people that are 100% in crypto. But anyway, I think markets will be markets. They're cyclical, like everything else. We've had an interesting couple of years with macro, COVID, printing of money, and now where we are with crypto and crypto adoption. So higher is the word I would say for Bitcoin. That's where I think it's going. And there was a second part to that.
My second part was just, would you give us a figure for fun? And you can give me two. I know I always ask my guests, give me a 2030 Bitcoin price prediction. You can give me a bullish and a bearish.
Oh, I mean, you got to go like one being bearish and a million to be bullish. I remember seeing an interview. I remember seeing an interview of a guy. I never knew who he was, but he was a technology entrepreneur from Silicon Valley, and he came on some American show, and he's like, Bitcoin will never go to zero. It will never go to zero. And he was on a panel debate, and they were like, well, how do you know? He goes, because I know. And they're like, well, how do you know? He goes, because if it ever goes down to $1, I will buy 24 or $21 million of it. He's like, I got $21 million in a, so that if Bitcoin ever comes down, he goes, I'm going to buy it all at $1. So there you go. It's never going to go to zero. So now let's move on. And I just thought to myself, how funny that was, that he said he would buy all the Bitcoin if it ever got to $1. So yeah, I think for me, Denny, I try not to look at the noise too much. The price action is only one half of the story. But if you could go back to 1995, when Bill Gates was on CNBC morning channel, and they were like, so what is this thing called the internet? And like, why should we care? And he was like, oh, it's a pretty cool kind of thing. Tell me now, if you could go back to 1995 and they were like, there's this thing called the internet and you can buy a piece of it, okay? And you can buy as much as $1, $10, $1,000, 10,000, 100,000. And we're going to sell you that now. What person would not have taken that trade? If you could own a piece of the internet, and everything that was done on the internet today, there was a revenue share for it, right? Like when any traffic went through on the internet, they paid you 0.00001, right? Whatever. Everything that had to go through the internet got, you got a small micropayment of it. Like it would have been the best trade you've ever made. And when I look at crypto and blockchain technologies, it's never going backwards. The genie is out of the bottle. I don't think you can be like bury your head in the sand and discount it right now. It is building, and we didn't even touch on metaverse or Web3, but it's building the new infrastructure. It is building the new internet in a fairer, more transparent way where people can get remunerated for content creation and have ownership in a digital environment. And listen, with all the big technology backgrounds, when we went from candle to electricity, when we went from art that was actually drawn on walls to canvases, did you know that when canvas painters came out, the traditional Renaissance painters didn't view art painted on a canvas, because up until then, art was always done on walls, and that was walls. And it's funny because I've embedded myself into the NFT space and around digital art, fashion, and music and culture in general, because I'm really interested in that. And now you've got so many people in the last 2 years saying, oh, art on a USB or in an NFT or on your screen is not art. And I'm like, oh my God, I've just heard the same thing that I'd heard about when art went from wall onto canvas, So what I'm trying to say is that it will continue to develop. There will be cycles, but understanding how to navigate that will give you and your family the best opportunity for wealth creation that I've ever seen. And you can do it at your pace.
That's amazing. I want to really thank you for coming on today. As you said, we didn't touch on, and I know you have a deep understanding of metaverse Web3. Perhaps in the future, I'll be able to twist your arm and get you back. But there's been some amazing nuggets. When I'm dropping Dinny bombs, I think there was a lot of Shane bombs there, like nuggets of knowledge. So it's been awesome to have you on, Shane. I want to thank you, and yeah, it's been brilliant conversation.
Awesome. And before I go, you can get me on Twitter at Shane Crypto VC. So that's Shane Crypto VC. Hit me up on LinkedIn. Just put in Shane Kehoe, my name. And if you're interested in opening an account at Swissport, reach out or go on to the App Store, download the app. It's all self-explanatory. If I can help anybody out in any way, let me know. Hit me up, and just keep stacking those sats.
It's awesome. Thanks, Shane.